Alrighty, y'all. So basically, what I'm gonna be covering today is basically what I just do on a daily basis as I'm looking for my strategy, my setup, the day trades I take. Gonna look for some charts, whatever. Once I cover everything, you guys can feel free to ask questions. Try to refrain from questions as I'm like teaching, unless you just don't understand something. But usually after I cover something, I'll go and ask you guys if you understand. I have it uploaded here in Discord, but yeah, I could put it up on YouTube as well. Trust me, I'll get you guys right. I got you guys. Don't worry. All right. First thing we have to understand is I usually like starting on larger time frames. The reason being is because when you're on larger time frames, it's gonna take a lot longer to play out, right? And these levels are a lot stronger. They're gonna be a lot stronger than smaller time frames. So if you're like on the 1 minute, you know, obviously these levels are going to be way weaker. They're going to be broken through uh, pretty easily, right? But on the daily, on the weekly, 4 hour, even those levels are all really strong. So the first thing I do is I try to identify what direction the market is going in, and I'll show you guys how to find direction soon, right? So I'll try to find what direction the market's going in, and I simply just mark my previous highs and lows, right? Like so. I don't do this to take a trade off of. Uh, I just do this to know where I'm at whenever I am trading, right? So right now I'm charting Nvidia. I'll probably just use Nvidia as the example. Uh, but yeah, I don't just wait for levels to touch and then play puts up here at the resistance. I just use them for guidance. That's it. So that's the first part, right? And then the second thing is I'm gonna have to show you guys what a trend is to the upside and the downside. Weird volume is up, any setting on the Discord app, click the speaker on the live trading and it'll, because if you're just using your phone, it's gonna act like an actual phone, like you're on a phone call. You have to hit the speaker button. But look, this is an uptrend. You have a high, you have a higher low, a higher high, higher low, higher high, higher low. This is an overall uptrend, right? Just going up. This is a downtrend. So when you have a low, you have a higher low, you have a low, higher low, you have a low. Bang. So you have an uptrend and you have a downtrend. What's it called when you break the trend? A lot of people have different names for it. They have market structure shift, they have a break of structure, they have a trend reversal. It's all the same thing. It all makes the same, like it's the same fucking thing. People just use different terms to make themselves sound smarter, but in reality it's the same shit, you know? So it's like there we go. You go from an uptrend, you break a previous low, come up retest, fail to get above, and you stay below it. That's how you know you're reversing in a trend, right? So that's an uptrend to a downtrend. Here I could show you a downtrend into an uptrend. So before we started retracing, we still haven't seen lower than these lows. So I doubt we're gonna go any lower. But this is a good sign of a reversal. I'll get into this later. So we had a high, low, lower high, lower low, lower high, lower low, lower high, lower low. And then we ended up breaking and now we want to push higher. Obviously it's not gonna look super clean or super pretty. Well we actually broke down here, right? And now we're retesting. Uh, but that's how you find your trend reversals. It's just trying to figure out what direction the market is going in. Super simple, right? So once you know what direction the market is going in, now you know what direction you want to play in. So it doesn't look super clean on the daily. Once you start getting into smaller time frames, it'll look a little bit better. It's never gonna look pretty, like I said. Um, let's get into the 1 hour here. here you can see that we ended up breaking this previous high there. This was the last high that we attempted at going lower, ended up failing, and then we just stayed above it that whole time. And now we're consolidating right above that level. But as long as you understand how to market highs and lows on larger time frames, like so, you should be chilling. Because now that we know direction, we can trade that, right? So if we were in a downtrend and overall we're trending to the upside, like stocks are made to go up, right? So you don't want to just keep playing the downside or to keep guessing. Every day we're gonna have to make a decision, and every day we're gonna get a move, whether it moves sideways, up, or down, right? So we just have to be patient every single day. But looking at this chart, we were in a downtrend, and then we broke up into an uptrend now. What direction do we want to play? Downside or upside? I feel like it's obvious. Upside, there you go. Yeah, so if we're in an uptrend, you want to play the upside. So that right there eliminates 50% of your losses. Like if you were to take a loss, they're gonna come from the downside because the market's going up, right? So you're already cutting your risk to reward in half, right? Super, 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 super simple. Once you start understanding that concept, it's really not all too difficult, right? And that's all I look for. On Nvidia, we have an inside day. If you don't know what an inside day, it's basically when a candle was inside the previous candle. That happens when price starts consolidating sideways. And that means that price is going to make a move soon. When price starts moving sideways and it's sitting in a range, it's going to make a decision, right? We don't know what side it's going to go to, but we know that once it's out of that range, we can take a trade to whichever side. We just have to wait. We have to be patient. And this is just one stock, right? So if this one's sitting sideways all day, there might be a few other ones that are, moving. Looks like everything last week was sitting sideways. And we also do have FOMC this week, so it's going to be very, very tough. But now that I'm done charting Nvidia, I can go ahead and give you the guys the game plan on Nvidia for this week. 4-hour inside bar, 4-hour fair value gap up here. This is how I mark my fair value gaps. This is how I know which ones are valid. I have videos on YouTube as well that you could go watch. Super informative. I'll probably explain them a lot better in those videos than I will now, just because this is kind of brief. But I'll get my fib retracement. I'll go from the bottom of the move. So this candle here looks like it initiated that move. It was consolidating sideways, not really moving too much, and then this candle just goes, right? So I use the fib retracement from the bottom of the move to the top of the move, and I'll use that to try to figure out which fair value gap I want to use. If the 0.5 is sitting above the fair value gap, then I'll more than likely target the one right above it, because I know that the 0.5, if it gets broken, then price is going to either consolidate or reverse, right? But it's as simple as that. The settings on my fib are the 0, the 0.5, and the 1. Everything else is ticked off, and I just made it white to make it easy to read. All right, but now that we know which fair value gap we want to use, this is the move right there. We choose this one because if we fall below that in the 0.5, price is just ranging. So this right there is going to be a trade that I'd want to take, and this would be a swing trade because we're on the 4-hour time frame. We're not going to get in and play 0 DTEs on a trade like this. This is how you will blow your account. You have to understand what time frames you're playing, what type of trade you take. You have to have a plan, a strategy, and you have to execute. You guys will see that on Monday. So make sure you make an effort to show up on Monday. I'll try my best to give out alerts like in the Discord when I'm live trading, but when I'm locked in, I'm locked in. Sometimes I forget, especially if I'm playing 0 DT. But I'll definitely do my best, even though I always do. All right, so that's just the video. That's the game plan for that. Super, super simple. If you guys are confused, feel free to ask away now. Bro glazing himself. What I say? What I say? We're about to make a bag this week. How do you do the big square on the left side? Over here by this brush, you find the rectangle. Are the best fair value gaps found within liquidity? Fair value gaps are liquidity, bro. Liquidity isn't highs or lows. I trade options. Fair value gaps are imbalances, yes. Fib retracement is a tool used to show like where liquidity can be drawn at. You know, just like it's more for like psychological levels. You know, if a stock makes a move, um, it won't fall below a certain price. So say the easiest way I could put it is if like SPY's at 550 and it makes a move from 540, 545 to 555. Once it breaks that 550 level, that's like a psychological level. That's just how it works in a nutshell. I'm not saying that that's what it did. Yeah, the 7-day free trial includes premium features, so you'll be in here for a week. But yeah, so now I'm just gonna spend the rest of my time charting SPY, QQQ, other stocks, and see what we got. So we got fair value gap on SPY. I'm gonna change it to the 4 hour. We have a fair value gap there, right above this level break. So we broke a level here at 551, created a fair value gap, ripped through it. I'll look to play this fair value gap when we retrace. And it's going to take time to retrace, if it does retrace. Sometimes it just keeps going. But if it keeps going, you know, we catch those moves pretty easily. We just play the trend. Yeah, level 2 trading on Weevil. Will this be posted on YouTube? I'll post it. No reason not to. All right, now let's move on to QQQ. QQQ is the same thing. If I pull out the fib retracement, it broke that trend, downside trend. Now we could target this gap. Oh shit, this is a fucking banger trade right here. We actually have a nice target, like a magnet. If we get down to this fair value gap, dude, we're gonna make a lot of money off this trade. That's an A+ setup right here. Then obviously when you're in the trade, you set, you know, once you find the trend, find your fair value gap, you use your fib, set your risk to reward. You have a target, so your target's got to be previous high. So like once we retrace down here, I'm not looking to just buy and hold the entire time. You want to sell at previous highs and lock in those profits. That's how you're going to stay profitable. Then you just want to target each previous high. In this case, we have a gap up here. So we're definitely going to come up there, test that, or even fill it. So it's like, that's a really good target, 490. All the way from 466, pretty crazy. Why is this information free? Because I feel like it should be free. You can take this information and make thousands of dollars. For as much money as I've made this year, I really feel like you guys should use this strategy. Let's say you buy calls, but the chart hasn't reached the level you want in at. You can still buy them once the level hits. It'll put you in. You can set it like you can set like a limit, but you also won't know what price the contracts are. So I usually wait or I add on the way down. So like say if we're retracing, because it's not promised that it's gonna exactly touch the fair value gap. You don't know if it's gonna touch. It could like go down a little bit and then it could just launch up, right? So I usually start adding as it starts approaching the fair value gap, but not when it touches. So I'll add little by little. So that way, if it does go and I'm not in my full position, screw it. I'm still making money. But it's better than like entering your full position up here and then it keeps going down and you have to add more and now you're over trading and over leveraging. Just little by little start adding. That's usually how I play it. Yes, sir. So QQQ, Nvidia, SPY, all these look great. Tesla. Tesla's been consolidating a lot. Not sure if I really like it. It has a 4-hour inside bar, so I'll mark that. We'll pay attention to it. But we'll see. We'll go and what happens. See, Meta, I don't like SMCI. We traded this last week. SMCI was fairly well. Had this fair value up there. Pretty sure it was on 3 minute. Yeah, it was on the 3 minute. Fair value gap on the 3 minute. We targeted previous highs. Our target was up here. Waited for the retest on the fair value gap. We got in, set a risk to reward, never got stopped out. Stayed patient and it paid. Then I went and played golf after that. From Tampa. Hell yeah, bro. Respect to Tampa. I'll see you here in the live trading on Monday. Tomorrow, 8:30 Central Time. But looks like I pretty much got the setups that I want. I don't like Meta. I don't like IWM. Or actually, that's an insane 4-hour inside bar in IWM. That's bullish as hell. I like IWM too. Target 220. Yeah, this previous high there. Insane setup. I sell my contracts at the stop loss. So say for example, if I were to get into QQQ 464.49. Did you ever go through getting out of trades too early, whether you're right or wrong? If so, how did you fix that? Yeah, so you're never gonna know if you get out too early. The people that hold their full positions all the way to 200, 300% are playing with the money that they're willing to risk, right? Whenever you see people making like these big amounts of like big, huge amounts, it's either that they're multimillionaires or they have low IQ, right? Because they're losing more than they're winning, especially if they're holding their trades. Because if they're holding their trades at 300%, promise you they're holding them to 0% too, right? So the way I fix that is I just take profits or scale more than half of my position once I'm up in the green. So it's like it doesn't have to reach my first target. That's just like where I want to look to exit the majority of my position. But I secure a lot of my position whenever I'm up like 10, 15%. So I trade with like five to $10,000, right? So if I have $5,000 in a trade, I'll get out at 10%, right? I'll scale more than half and let my runners go and make me a little extra profit. I'm not too concerned on making 100% every single trade. That's never going to happen. You have to get comfortable losing, taking small losses, because once you do win, the winners are going to be so much larger than your losses. I mean, just look at that risk to reward. So that's kind of how you got to think about it, to eliminate losing more than you should. And you just never know when you're going to make more than like a regular day. You just don't know. You can't predict that. Yeah, I'll post these charts. I'll probably just send it in my alert channel. Yeah, always. I mean, ask my members. Anybody that's been live trading with me every like on a daily basis know that I hit my stop loss. I get out. I take my 10% and I leave my runners. Call me Mr. 10%. Yeah, the winners always take care of the losses. Zero DTEs, 0 days to expiration. That's when the contracts expire the same day you bought them. Uh, those are a little more difficult to gauge, but at the same time, it still works the same. Do you enter when it breaks the 4-hour inside bar? No, so whenever it breaks the 4 hour inside bar or daily inside bar, I wait for a fair value gap. So it's like I'll wait 15 minutes in the market open, and if it breaks through and it has a fair value gap, then I'll play that. That way, you have that secure move. And if I don't get it on the 3 minute, I'll move into the 5 minute, wait for that. If I don't get it on the 5 minute, I'll move into the 15 minute, wait for that, and so on. Because the larger the time frame, the stronger the move's gonna be. But yo, that's pretty much it. I appreciate everybody that showed up for this quick charting session, quick little brief update or little class, I guess, just to get you guys prepared for Monday in that way. Because I know there's a lot of new people in here. So if you guys kind of have an idea of what we're doing tomorrow, you guys are gonna be a lot more prepared. So I hope you guys ready. Hope you guys are ready to fucking bank, because that's all we do. We have FOMC on Wednesday, so it's gonna be a little tricky. Be prepared for that. Tuesday might be a little slow. Be prepared to wake up at market open and trade early morning, and then we'll see how the market wants to react. But yeah, you guys take care. I'm out of here. Deuces. Hope you guys are ready to bank.